Definitely in Las Vegas when you see these kind of things in the airport.
Hey guys, while I continue to have fun here in Las Vegas, working hard from here, networking, building the business, and answering a lot of a lot of questions I've received from people not only here on the ground in Las Vegas, but also from folks, of course, by Twitter, Instagram, YouTube, whatever, from you guys, is the prospects of a sort of a continuation of this Trump rally. It's been labeled a potential Santa Trump rally, so I found this picture. I found it to be quite fitting. And funny. And I'll a quick side note. This is not at all a political statement. I'm just making making the case for what could be a continued risk-on move into and throughout year end. So let me go through a couple things here. What and why, from a price action perspective, we might continue to see a push higher in risk assets into year end. And number one is sort of a seasonal thing. The best 3 to 6 month period for the U.S. stock market tends to start about right now in sort of the middle part of November, so through the early parts of the spring. Sort of from a seasonal perspective, seasonals are in our favorite. Okay, seasonals are in our favorite right now. Let's look at a couple other things. I've got the SMH, the semiconductor stocks, and I divided those by the S&P 500. It's a relative chart, and you can see the relative chart here has seen a move to the upper end of the range. So semiconductor stocks may look to start breaking higher. If you remember last week in a public vlog I did for you guys, I talked about MU. This is Micron Technology. We did have a breakout after I mentioned that trade, so that too continues to work to the upside. And very importantly, what's taking place in the financials, let's quickly have a look at the financials and divide those by, let me put it this way. We had, of course, a relative or an absolute breakout in the financials, the XLF versus the S&P 500. That trade looks something like this. Okay, very nice breakout that took place here. But also in relative terms, the XLF, the financials versus the SPY continues to look very good. Now, I do think this is a little bit overbought right now, so I think this is a cause for a pause. And so what we're looking to do is this breakout was so meaningful that I do think right now it's very unlikely to stop going into year end. From a structural perspective, which is fund managers that have been caught on the wrong side of the market, they're probably going to have to chase this market higher. I don't think maybe necessarily right this second, although the week of Thanksgiving tends to be marginally positive for stocks, but sort of there certainly is the potential for a bit of a pullback or at least a pause. The point is that these breakouts, both in absolute terms and relative terms, from financials to industrials to other parts of the market, were likely too strong to start fading into year end. Okay, so that's a very important point. Now let's look at a couple of bull flag patterns, for lack of a better term, that are waving now in parts of these markets that have looked very good. Bank of America, right, consolidating right here. Now again, this is, to me, in my opinion, overbought, but potentially something one would want to buy after further consolidation and then some moving higher. And Bank of America is waving what we call a bull flag. Again, not a confirmed breakout bull flag yet, but it is certainly waving that flag. BIIB, this is Biogen, part of the biotech stocks, of course. Look at this thing. It's sort of bull flag, bull wedge, whatever you want to call it. The names don't matter. It's important to know that the price action here does support, has now pushed this market, the stock higher, and it's now consolidating. So here too, a break above at that upper end of that range would be interesting. Deutsche Bank, just to put up another banking name. Look at this name. After breaking nicely past resistance, is now waving above its 200-day moving average. That's that red line. That's another one that's looking pretty good. And even stocks like Caterpillar, industrial stocks like this, after having had a nice pop, they're now sort of consolidating nicely. So I think all these moves are likely too strong to start fading into year end, given what's afoot here. A structural perspective where fund managers have to chase things higher. So I think the prospects of this Trump rally do look pretty good.